Hello, everyone. My name is Igor Tomic, and I'm CEO at Dash Devs. And today we have a really interesting episode that I would like to discuss a lot this year. It's why behavioral science is important in fintechs. And I'm pleased to introduce two guests today. It's Anna Nyvelt, who is co-founder of the project, and Noemi Molnar, who is chief behavioral scientist. So hello, how are you today?
Great, thank you. Thank you for inviting us. We are very excited about this podcast.
Just to put maybe some like alignments and definitions, right now in digital products, we see the shift into the understanding and following the behavioral patterns of the client. So we would like to explore why customer behavior is becoming essential in fintechs. Traditional financial services often segment users by age, income, or location. And I think that's something that we would like to go deep today. And the first question is basically why behavioral science matters. Like, what is your view? What is your opinion? Why it's so hot and important today and fairly didn't exist like 10, 15 years ago?
Before answering your question, why is it important, I would like to clarify the definition of behavioral science. So it's a very inter and multidisciplinary field. It's an intersection between psychology, sociology, business, even finance, economics, and also neuroscience. And behavioral science identifies the unconscious decision driver factors and how those affect human decision making. I would like to ask you, Igor, what do you think? How many decisions do we make a day?
Oh, I think hundreds or even thousands, especially if you're a manager, you're constantly in this decision flow, like what is the feedback, what are the results, what are the solutions. But I personally really like behavioral science and I love the works of Skinner. So it's a little bit of the experience on my side. So I think it's really important because in my view, it gives kind of the distinguishing between humans and all other species, because the difference is that we behave and we can understand the consequences of our actions. So I think that's why it's so important while building digital products.
So you would say thousands of decisions. And what do you think? What proportion of these decisions are made unconsciously?
Most of them, because one of the really interesting experiment that I really find fascinating, that's an old one, if I'm not mistaken, from 60s. It's when the group of students were given a task to pick up the ball from the table, the small one. But then on the table, there was an apple put, and the same task was given to the students. And what scientists did, they kind of measured the gap between fingers when you're picking up the small ball. And what scientists find out, when there is an apple on table, the gap is kind of narrow because our brain is thinking, okay, I know this guy, he might change the decision. And instead of picking up the small one, the person will pick up the big one. That's why there are a lot of things that we assume that we're taking the control as human. Actually, there is a lizard brain which is helping us to do a lot of things. I'm not even talking about breathing because that's a good example when we're doing it on the ground and we are not thinking. But the moment you're saying, think about your breathing, you're kind of becoming in control over this process.
Right. We are very much influenced by our unconscious drivers, but actually we make around 35,000 decisions a day, and approximately 90% of these decisions are made unconsciously. So what we do and what behavioral science, this science focuses on this 90% and how these unconscious drivers, motivations, attitudes, emotions, perception actually influence our decision making. And I would like to use our motto from BeHive. We understand people as they are, not as they should be. So this is what behavioral science is about. Because for those who are less familiar with this field, behavioral science, they lies in just like simple reality. So people do not make decisions purely rationally, yet most of the systems, policies, products are still designed as if they do. And what we do, imagine it's like an iceberg. So you see the top of the iceberg, you see the visible behavior, which is very observable, which is very objective. And there are the invisible mechanisms under that. So how social influence, different motivations, context, cognitive biases, and even culture and even emotions can influence our decision making. So this is why it's so important, because 90% of our time we are in this autopilot mode. And this is where we have these cognitive biases and which influence our decision making.
Yeah, that's true. And maybe that's the really first takeaway from this episode, because a lot of people assuming that humans are rational species. So when we tend to think that we're making decision, are we really doing it? And that's connected to the product usage, marketing, influencing, et cetera, et cetera. And I would like to follow up with a question because it's more about building the product. So what does it help us to understand that traditional business of product thinking often misses?
So we work a lot with financial institutions and banks, and what we see that many times they're purely focusing on the functionality of the product. And once the product is done and it's functional, then they use branding and marketing that, okay, how it will get to the client or the customer and how they will understand that. But how our approach is different is that we integrate this approach already in the product building. So there is this concept in behavioral science called perceived value framework, which states that they're not just the functional layer in a product, but it also has a social layer, an emotional layer, and a personal layer. Let me give you some examples. So social layer could be how it influences our social status. So when you see someone is grabbing like a premium card, you immediately associate that person must be a more wealthy person. Or there are also the personal values. So for example, Revolut, when the war started in Ukraine, they made this card with the Ukrainian flag as like to show support. Or they also support female football teams in the UK. So those are statements which can be aligned with the customer's personal values. Or it also has the emotional part. So what kind of emotional triggers do they integrate into the product? So once they focus on the different layers, it has a higher chance that it will have a higher value for the customer. And also it's important to focus not only the benefits, but also the cost side. Obviously price, it's part of the rational decision making as well, but the perceived effort to understand the different financial jargons or to understand the concepts and the psychological risks as well. So when will the customer feel in control once they have more understanding? So rather than just a cherry on top kind of approach for behavioral science, we believe that these factors should be, and these aspects should be integrated in product building from the very first point.
That totally makes sense. And cultural matching, I think that's one of the really good visible point right now, because when you take a look on the brands, and especially if they global, they trying to match into the cultural stages or cultural approaches within the specific region. And what I'm interested is like why it's specifically useful when we're trying to understand how people make an everyday decisions. Like, do we really can put it into the frameworks and then estimation into the projects and products? Because is it influencing how people are doing their decisions into then the products practically?
Yes, definitely. So let's start with understanding the customer. So what will a traditional market research company does? Person, the potential customer, make a decision in like a few seconds, and the traditional market research company will ask about this decision in 6 minutes. Let's say they buy a chocolate. Was it because of the price? Because there are peanuts in that? Because it was on the top shelf? Because of the packaging? And what happens, the customer will start to rationalize the decision. So, which was made on an unconscious level, as I mentioned, the 90%, then they try to focus on the 10% and rationalize that. And what happens that the actual true drivers usually stays on the unconscious level, maybe because it just like reminded that person to his grandma's and that person had this nostalgic feelings. And because of this emotional driver, they bought that product. So it all starts with understanding the customer and what are the actual drivers behind that. And once we understand those drivers, we are able to utilize that. And once we can utilize it and just shape the decision-making environment, that can nudge the customer to a certain direction.
I'm always curious about like a shifting from academic into the practical, because what I hear and usually what I've seen in marketing, it's like asking people. But what I see in behavioral science, that it's much more important what you do rather than asking why you did it, because then this process is happening. We're kind of to rationalize. And do you think that the marketing sometimes does it wrong by asking people rather than taking a look what they do? Because it might be the process in digital products. Usually the product teams, they tend to see the numbers and behavior inside of the application rather than having the focus group and marketing outsourced and asking, do you like our brand? And people will say, yeah, I love the brand. But in reality, they're not buying, they're not using the services and products. Like, is there a gap between asking and watching people doing the things?
We also have our methodology for that how we can measure the decision making on the unconscious level, because people have usually a rather stable identity and they want to reinforce their identity by answering the questions in a way which aligned with what they believe they are. But we actually had a really interesting case study about that and how psychographic segments can really predict decision making. Noemi was more involved into that project. So do you want to share some details about that?
Yes. So whenever we think about segmentation and understanding different customer behaviors, we always go for the psychographics. When it comes to banking, we identified three of the most important psychographic factors, which is openness. So how open are you to new things and innovation? How risk averse are you? So especially to financial risk. So are you risk averse or risk seeking? And then the third one is your goal orientation. Are you more short-term oriented or are you more long-term oriented? And using actual behavioral data, we can identify the psychographic profile of the person using a product. And based on that, we can tailor how the product is offered, how you should communicate to that person to actually buy that product. So it's very interesting that we are not looking at demographics. We are not like that's also a relevant factor. But the most important thing to actually be able to understand the customer are those psychographic factors. And when we identify what's most important, we always go back to academia and what are those papers identified within the literature. And that's why our approach is very proven and data-based and science-based.
It kind of slides us into the second kind of pillar that I would like to discuss today, why it's so special for financial services. Because in one way, if we're talking about the social networks, stuff like that, usually the consequences of missing something and not so big, like we are just posting something wrong or it doesn't work. But with the financial services, we have the guardrails as regulators. We have pretty strict rules, how we interact with the customers, how we are making decisions. Is it making like behavioral science a space here? Because if let's say that we will give reports to regulator that we are assigning the credit score based on behavioral data, is it making sense for them or it's an improvement here?
Yes. So when it comes to financial services, behavioral science is more important than ever because there are so many changing trends like buy now, pay later solutions and, crypto and everything is online. So money became digital and very abstract. So people cannot interact with the money anymore. You cannot touch it. You cannot feel it. So it means that we are even more unconscious about how we spend and how we behave in this space than ever before. So we are more prone to our own biases and heuristics, and regulators have to know that can be influenced very easily in this space. And so many players are taking advantage of these unconscious processes, and they are not using behavioral science to actually help people make better decisions and educate users, empower them, but on the other hand, it's actually about how we can get them into more depth and more, behaviors that are generating profits for them, but are actually not good for the customers. So both on the regulator side and the players' perspective, it's something super relevant and something that we should talk more about.
And what do you think? What makes banking, payment, savings, or investments especially sensitive to behavioral influence? Like, what is the difference? Because if someone is influencing me for buying different brand of milk or shampoo, I don't think it's a big deal. But is it something that we should take into account in financial services?
As I mentioned, money is very abstract, so our brains cannot process it. We don't know, how much $10 actually is worth because, we are prone to spend the money on actual needs. Like I will choose the pizza or ordering a pizza tonight over putting that money away and saving up for my retirement. So we are not good at numbers. We are not good with money, and we are not making long-term decisions that are actually good for us. And that's why it's so easy to manipulate us and with money because we don't see the money movements anymore, whereas with milk or coffee we can touch and know how much we actually need. It's a very different dynamic.
That's a good example. And is there any way, maybe from behavioral science, to make it more rational or conscious decision with the digital services? Because we see a huge evolution of the interface of the mobile applications. Like 10 years ago, I would say it would be really hard to kind of make instant and regrettable decisions for spending the money because technically it takes you time to go and pay for something into the branch. But with the current technology, it's like just one click away from your device. is there anything that we can do better for conscious decisions over those financial transactions?
Yes, definitely. So you can use smart visualization to help people actually understand where their money is going and how they should spend it. So, for example, Monzo has a very good case study for this. They use video and stories to actually help people understand how their savings is growing. So, for example, let's say you add a goal that you are collecting money to buy a new bike. They actually have this visualization of now you have the base of the bike. Now you added more money to your savings, so now you have the wheels. So it actually helps people to understand, okay, I'm getting closer, and it keeps them engaged. Or another very good example is the smart program designed by Thaler. So there they wanted to increase the savings that people put away. And what they did, they didn't just say that, hey, put money into your savings now. They made people sign up from their future salaries, a certain amount to be allocated to their savings. And this way they increased average savings from 3% to almost 14%. So what they did, they actually understood that when it's your future money, you're more likely to put it into savings because you don't have it yet. So they eliminated that present bias. Whereas when you ask me now, no, I have so much things to spend money on, I can think about my future. So they designed for the human mind and the human experience, and you can get results very quickly from a very easy cheap intervention.
Gamification is a key. Like we see that everything is gamified. Maybe like a good example from my personal experiences, Ukrainian banks, they're using achievements inside of the banking applications. Like they have stickers, and if you do a specific things that you have the sticker. And another one that we practically implemented for the bank in the United Kingdom is integration with the weather. Like when it's raining in London, it puts £5 to your saving accounts for the trip into sunny place. So I think this gamification might be one of the answer when we're educating and showcasing not just mechanical transactions, but like showing the consequences of your specific actions. But is there any other ways to gap it, like inside of the digital products for making the decisions, or for financial institutions to design products how customer actually behaving?
Yes, so definitely. So you have to think about the process when you build a product, not only about, okay, this is what I want to sell, functionally this will make sense, but you should actually start with the psychology of what that person will actually experience. What are those emotions that that the person will go through? Money is very emotional. So whenever you pay, there's an actual pain related to it. It's been shown by fMRI studies that your insula is activated, which is, related to fear. And so whenever people are dealing with money, there's always this feeling of anxiousness and just actual fear. So whenever products are designed in a way that gives them emotional safety and security, and they can turn to a bank as a trusted advisor, then their behaviors will shift and they will be able to make smarter choices.
That's interesting approach. So we definitely need to reflect, and that's already the second takeaway that I would like to have from this episode. And rolling back to demographics, because a lot of things in financial industry is around people and how we properly fragmenting and understanding. Even the onboarding, like we have pretty strict rules who can be onboarded into the products. I don't think that this is a good example of behavioral analytics because we are onboarding someone who's ineligible by the regulations. But that's a question to you, Anna, like why it's important to understand customers beyond demographics data.
Only relying on demographic data gives a very rough sketch of the customer. I know this is the traditional approach, but this might be a bit bold, but like from a behavioral science perspective, it's like trying to predict someone's decision making by their height or eye color. It actually misses the mechanisms that will drive the behavior. Obviously, there are some correlations there that probably the more affluent customers will choose different products, or certain areas of the country or the city, if they have that address, and there are more, for example, people from low socioeconomic positions, they probably will not choose those products for like investing or different options. The demographic data will describe who are these people, which is very useful in targeting or online marketing, but why they behave the way they do, that can be answered only through analyzing their behavioral drivers. Because two people with identical demographics can behave completely differently. For example, because they might have differences in their beliefs or expectations, habits, routines, emotions at the moment of the decision, or even the perceived risk and rewards. Actually, a fun fact here, because I participated a panel discussion yesterday, and we were talking about female investment habits. And for example, testosterone level and the risk appetite is connected. So it has an impact on the demographic aspects as well, but it's good to know why they behave the way they do so we can utilize those factors. I would like to talk a little bit about a different model, what we use in behavioral science, the COMB model. So it identifies behavior as a function of the capability, opportunity, and motivation of the person, and not the demographic traits. So the small situational factors like the timing, the environment, and even the social setting, as I mentioned, the social values are very important, often outweigh the demographic factors.
That's an interesting point because I'm thinking about like a success of several projects. And for instance, you mentioned Revolut, and it seems that a specific fragmentation of the audience led to the success. Like, is it connected to the behavioral? Because people who are using neobanks, they kind of different, although they come in from the same geographic and demographics. Like the banking existed and the same people were using traditional banks, but somehow there is a group who is more fluent with the technology and neobanks and stuff like that. Is it because of the difference in behavioral approach, or something else, from your opinion, is allowing those financial services be more successful than traditional banks?
So it's interesting that you're mentioning Revolut, because the first big boom they caused was because they said that with changing money, right? So because people had this perception that traditional banks are more expensive, and they were able to create that perception now that they will be cheaper. Just a few months ago back, we checked the actual rates in traditional banks and now with Revolut, and they weren't cheaper. So, but they were still able to keep that perception. And I think what is important to highlight that yes, digital fluency is important, but the behavioral factors are also important. As I mentioned, most of the traditional banks focuses on more like the functional part. But what I really like about Revolut, that they are able to translate this traditional, more jargon lingo to a more personal, easy to understand phases. So for example, when you want to buy eSIM, so extra internet, for example, through Revolut, they are not telling you that this is the price and this is what you will get, but they are showing you that without Revolut eSIM, this will be your Instagram story. And when you don't have internet and you only have the black screen, and this is what you will get, and just a beautiful photo of beach. So they make it easier to understand, and not just like understand on a cognitive level, but to actually feel what difference they can make.
I'm thinking about exchange example, and what I see, and at least in financial services, there is a lot of discussions. The things that Revolut specifically changed, that you're in control over the rate. So the rate itself, there is no difference. But how you are achieving this conversion is a total shift from traditional banks. Because if you're traveling, you have your card in pounds, then you go to Hungary, and then you do like you're paying for something. You don't know in advance what the currency rate will be. But with the Revolut, what they allowed to create the card in the Hungarian forints, exchange in advance, and then utilize and actually do not use pounds. But when you're paying, you kind of prepaid this or baked with the exchange rate that you made a decision. Is it good for you? So is it fair to say that sometimes it's not the rational value what we get, but more the process, how we go there and how we get those values?
Definitely. And I think what we are not talking about enough is like the feeling of being in control. So the sense of control, because nobody likes to feel lost in the whole process of like in the financial world. So I think it's important that we give the customers that kind of feeling that they are in control and they are capable. And once the journey there is smooth and easy and feels natural, then they will use that product more often probably.
That's a good example. So being in control, it's something that we need to factor, not the user interface, not the fancy application or something, but how the person feels. Is it making a decision over complex stuff or something which might affect you? Is it something else in this list except that being in control?
I would say the user interface and the whole behavioral design is also important in this situation. So as I mentioned, what is the perceived risks and cost of the whole process? If it's too much effort, too much cognitive effort, then they will not use the product. So having a very smooth interface and design, even the visuals, what we use there, is very important.
So easy to use. And that's what I'm pushing a lot. The technical team, they tend to create click after click, confirm and confirm. Thus, this leads into the Windows style. Like, are you sure that you want to close the window? So it kind of creates the burden on the customer shoulders as decision making, even though we don't tend to think that we're making the decision. Yes, we're making the decision, which is then affecting the usage, the KPIs, or even certain feature not be used by a customer because you need to click a lot of screens and then accept the terms and conditions and then make a lot of hard decisions. Okay, that's a good one. And in your work at BeHive, have you seen cases where understanding mindset or behavior related something that is standard segmentation missed?
Segmentation really, like psychographic segmentation, really can help us understand, how people approach different situations. So some people want to feel in control in a certain case, and then other people want to feel secure, or others want to feel excitement and that something new is coming. So because we understand, their main psychological traits, we could actually show that what product is actually relevant for them and how they want to feel about that product. And just based on demographics, you would never get that information. Just by understanding this, then you know how to communicate to the individuals and hyper personalize your own message and how you get across that product. And in the end, that's what will sell it.
That's true. And that we see maybe for good examples with the social networks. No one is showing the timeline according to your followers. It's curated and listed on your interactions with the system. Good example with the TikTok, Instagram. So I think there is no way back. We will not get the technology back as it's used, at least in social networks. So maybe we will see stories and the motivation notifications from your banking application instead of showing the timeline what is going there. But that's a bold assumption. And I would like to jump into the kind of final section for today as embedded finance. And I think it's a separate topic because if we're talking about purely banking applications and kind of you and your financial standpoints, but embedded finance is something that we hear a lot for the last 3 years. And before jumping into this section, like how do you define embedded finance from behavioral science? How it's different from traditional banking and kind of digital applications?
Yes. So we already mentioned that when you pay for something, there's a pain related to it. And the more you have to go through to actually get the product, the more pain you feel. But with embedded finance, you basically are taking that pain away because you don't even have to click anything, right? So you don't feel the pain anymore because it's so seamless that it actually feels like nothing happened and you didn't even spend money, even though you know you did, but it doesn't feel like it and it doesn't register the pain of payment. And that's a good experience in a sense. So the more seamless the payment journey is, the better for whoever sells the product. But when you think about, some solutions that will actually cause people to go into debt, it's something very serious and very, very dangerous. And we've seen that now, people finance meals, a dinner through debt. And that's just not something that we should be doing because it's just so irresponsible and you spend way more money than you actually have, and it's all because you don't even get 1 second to think about it because it just becomes a habit that everything is just going automatically. So it's a very, very effective tool. Like, for example, you could, if you say to people to pay in full versus take out a loan, you wouldn't take out the loan, but you will definitely go for, okay, I just pay in full. But it's actually a loan, but it's framed so differently that your brain doesn't register it as something painful and something that you should be cautious about. So it's just very interesting how this whole industry evolved and how it's still so unregulated, especially to people who are vulnerable to it.
That's a good example. Buy now, pay later is on the rise, and like one of the biggest successful startup in European Union, Klarna, is definitely a good case for having the niche where the traditional banks had a dominance for decades, like powering up their personal loans, revolving credits, and basically utilizing this behavioral approach when you are embedded into the decision-making process and it kind of feels seamless. It gives it advantages because definitely the solution is well known and even aiming for United States market, but in the same way, it potentially making a harm for unprotected people. And thinking about that, is there any way how we can ensure that people who don't have a risk appetite or they're not eligible with the risk, we can somehow they're educated in our financial products? So I understand this part. Like sometimes it's exploiting kind of people with the no thinking process, but is something that product teams or technical teams, they should keep in mind that, okay, we're making it seamless, but we warning people who might not be sustainable with the risk or outcomes?
Yes, so exactly. So sometimes you have to use friction very strategically, because if it's too seamless, then you're not incentivizing people to make a good decision. A good example for this is that if people have to wait more than 2 seconds for an elevator, then they just rather go up and walk. So because there's friction and, oh my God, I have to wait so long, I would just rather go up. You made the right, better decision for your body and for your health. You walk. So when you use friction intentionally, it can help people make better decisions and nudge them into the right direction. But this has to be very intentional from the product team, and they have to understand the users and how they think very well. And also they have to be incentivized for this. And that's why when, there's a big banking player you can trust and who, actually puts their users' interest first, they can push for this. But some companies are built around the actual opposite, and customers don't educate themselves, especially those who are more vulnerable to these kind of things. So it's either the regulation side who has to, make certain rules, but usually they are very, very late. So even with social media, now it was just the first case where it was actually admitted that the product was designed to make teenagers addicted to social media, but it's 20 years later, right? So with all these solutions, the regulation side is very late. And, there's something we call as dark patterns. It's when behavioral science is used unethically. And it's something that the regulatory agencies should take very, very seriously. Usually there's a penalty, but not big enough for companies to actually care about it.
Can I add to that? Because we had this results that customers, when they are buying something or when they are opening an account, they don't want to make more than 2 decisions. So the friction Noemi is talking about is not that high. So it could be maybe just adding an extra decision layer to that environment.
But maybe then product team will not be happy with the KPIs and performance of the product. But that's our social responsibility. And the question that I have, like, if I'm learning about behavioral science as a product or if someone from technical team, where I should start with educating myself? Because it seems like a big field and some materials should be for that. So what is your suggestion? How do I educate myself?
On behavioral science in general?
Like approach, because it's a huge field and it's not enough to know like the compliance, the technical capabilities, the product. There is an aspect which I feel sometimes is missed from the product team or engineering teams too.
Yes, so behavioral science is, Anna already mentioned, very complex, and obviously you can read books and listen to podcasts. But it's very important to actually work with experts and behavioral scientists, because it's very important to be actually formally educated in this field, because this can be used for good or for bad, and things can be misinterpreted. So yes, definitely people can educate themselves, but it's also very important to make sure that you work with the right expertise and the right advisors in this space, I would say. But definitely a good starting book is Thinking Fast and Slow. That's obviously the main piece, and also Nudge. There are some certain blogs and podcasts which talks about behavioral design as well, because behavioral design actually focuses on the product and digital design and how behavioral science is incorporated within that. So that's something that you can also read about.
Yeah, thank you so much. And I love fast thinking, slow thinking, because it shows the difference between our lizard brain and the conscious brain. So that's a really good one. If you read, please reread. If you never heard and you didn't read, please go find it and make sure that you see how we're actually making the decision. And since we're approaching the end, I would like to ask the question. We discussed a lot today and we covered the topics with understanding the demographics, how we're building the product, but maybe something that I didn't ask today. Would you like to answer that I didn't ask?
So for me, what I would like to highlight is that all these players have to understand that they have to build trust and emotional engagement with their users. And human trust can be easily broken. And just as humans, some companies think in the short term and don't think about the long-term impact of their decisions. So I would highly encourage everyone to keep in mind what's best for their users and how they can actually be there for them, because the more educated and the more engaged people are, the more they will actually use your services. And just by, getting some short-term profits from things that might not be beneficial for your users will have a negative impact on the long term. Just keeping in mind that everything that we individuals experience, companies can, have the same decision make dynamics. And that's why it's so important to have a well-balanced decision framework on how to design solutions.
I fully agree with Noemi. One additional point is that we are talking about decision science and behavioral science, but it's important to highlight that once the decisions are not made in the physical space anymore, but in the digital one, so there are no branches and everything is online or in a digital environment, the decision factors can be different. The noise is bigger, so the whole process can be a bit different. So I think it's important to not just like try to bring the decision from the physical space to the digital one, but actually what Noemi mentioned, to really work with experts and just like work together how you can make the best environment for them, and not to forget these kind of frictions in the process.
That's a good starting point. So today we have two specialists from BeHive. So if you will have any questions, I think it would be easier to find in LinkedIn. And thank you for this discussion. It was a quite explorational one. I think our listeners and viewers, they learned something new today. Please follow us on the social networks. Please take a look on our next episode, and we're looking forward to see you again. Thank you, Anna. Thank you, Noemi.
Thank you.